It seems like everyone is talking about DSCR loans lately, so of course I had to do a video about it. This is going to kind of explain what it is. I'm going to take it from a first-time homebuyer's perspective to see if this is something that you should look into as a first-time homebuyer. Now, before I begin this video, these types of loans are only for investment properties. So it's not going to be for your primary residence. But if you're interested in getting into investment properties or investing in real estate, you may want to listen in. All right, so the major advantage of this type of loan is that you don't have to use any of your personal income or your debt history, your debts that you have to qualify. They won't look at any of that personal information. Now, what they will look at for qualification is, does the rental income bring in enough money to cover the mortgage payment? And to cover the mortgage payment, you need to have at least enough money to cover principal, interest, taxes, and insurance. So the entire mortgage payment. So when they're looking at qualification, they're not looking at you to qualify. They're looking at the property to qualify. Does the property bring in enough income to qualify for that mortgage? Also, they are going to look at two things from you. One is you have to have halfway decent credit. For most lenders, for a DSCR mortgage, you'll have to have at least a 640 or higher. It will vary with different lenders, so everybody's a little bit different, but on average, about 640 or higher, you might be able to get one of these loans. Also, you have to have a down payment. So your down payment on average is going to be at least 20%. Sometimes it's up to 30%. Generally speaking, the higher your credit score, the less you'll be required to put down. So for example, if your credit score is a 650, they may require 25%. But if your credit score is a 750, they may just require 20%. But 20% is pretty much, for a lot of these lenders, the minimum you'll be able to put down to buy one of these investment properties. Now, you're thinking, why is this DSCR becoming so popular? Well, in the past, you could only do this by, like, for more commercial properties and not residential properties. So now this is coming more popular with residential mortgages. So you can, get a regular residential property as long as the rent is going to cover the mortgage payment, then you will be able to qualify. And you, of course, have your down payment and your credit. But this allows people to get their first investment property without having, so much income, because the property is going to help them qualify. Now, why wouldn't you just do a conventional mortgage? Because this type of mortgage, the DSCR, is not government backed by Fannie, Freddie. It's not like FHA or VA. This is totally not covered in any of those guidelines for those mortgage products. So that's why there's it's not a set guideline where you have a minimum credit score, a minimum debt to income ratio, anything like that. Different lenders will have different criteria for this type of loan. So if you're interested in it, you really have to ask around and do some research to see which one is going to work best for you. And then, of course, at the end of this video, I'm going to answer some quick frequently asked questions. But for the most part, I want you to understand that the reason why people are calling this the miracle mortgage, or maybe I'm just calling it the miracle mortgage, is that you don't have to have any of your personal income or any of your personal debts to qualify. You don't have to worry about your personal debt to income ratio. If the house qualifies, then you qualify. As long as you have a down payment, and that down payment is going to be between 20 and 30%. And as long as you have decent credit, typically a 640 or higher. Now, here are some frequently asked questions about DSCR mortgages. One is, does the property have to be currently rented? Like, do you have to be buying something from, a landlord that already has the property rented? The answer is no. They will calculate how much on average that property will bring in, and that's how they'll do their calculations as to whether that property qualifies for a DSCR mortgage. So no, the property does not have to be rented out. But if you are doing this as a first-time home buyer, buying your first rental property, it may be easier for you if it was already rented out. All right, number 2, Can you do short-term rentals with a DSCR mortgage? Answer is maybe. It really depends on the lender, whether they'll allow for you to use the short-term income that a property can bring in instead of the monthly income that a property will bring in. So if you're interested in doing this type of loan with short-term rentals, you're going to have to find a lender that will allow that. Number 3, what are the interest rates? So this is not a conventional mortgage, not FHA, not VA, all of that. So it falls outside of those guidelines. So typically it is going to be a higher mortgage rate, usually at least 1% or 1.5% more than conventional loan rates. So conventional loan rates are around 7%. This could be 8.5%. Number 4, do they have prepayment penalties? Yes, most of these DSCR loans do have prepayment penalties if you pay them off before 5 years. So depending on, they want you to hold these loans so they can make their money. They want you to hold them for at least 5 years. Now, if you can sell or refinance before the 5 years, but there will be a prepayment penalty. So if you are thinking about getting one of these loans, make sure you understand how that prepayment penalty works ahead of time. Number 5, are conventional loans better than DSCR loans? If you can qualify. Sometimes people can't qualify for a conventional loan because their income, their debt to income ratio, that sort of thing. This allows the property to qualify instead. However, a conventional loan would be at a lower rate and probably lower fees, and they more than likely will not have a prepayment penalty. So if you are thinking about doing one of these loans and you would qualify for a traditional conventional, then you may want to run both of those numbers to see if it's going to be worth it for you. Number 6, do you have to have reserves? So reserves, for everyone that may not know what this is, reserves are having a certain amount of money saved at the time of application or before you close. Do you have to have money in reserves? And usually the reserve amount may be a few months of the mortgage payment. So if your mortgage payment is, say, $1,500, they may require you to have, 3 months or 6 months of that mortgage payment saved, just in case, hey, it doesn't get rented out in time. Maybe somebody, leaves or doesn't pay the rent. They want to make sure that you can cover the rent if you don't have a renter. And this is going to depend. If you have to have reserves, that is going to depend on the lender. But it is very common for some lenders to require you to have some money on reserves. But if you don't want to have reserves, you may have to, shop around and look for lenders that allow a DSCR loan without reserves. But in my opinion, especially if you're doing this for the first time, you will probably need to have some reserves saved, because if it's not rented already, then you need to pay that mortgage during the time that it's not rented. And if it is rented, what if that, tenant does not pay? You need to be able to cover that, because eviction is not that quick. In order for you to evict somebody and get somebody else in, it could take months. All right, number 7 and the last one, what lenders offer this? So I don't recommend any particular lender on my channel, but several, I would say almost all the lenders that I've talked to that have traditional mortgage programs, maybe not at the major banks, but a lot of lenders have this program now. So you can ask around, you can ask a lender that you use on your primary residence if you already have a house. If you don't have a house yet, you can ask your agent for recommendations, but a lot of people have begun to offer this mortgage type, and a lot of mortgage brokers are offering this as well. So just ask around, start with your agent, start with any lenders that you've already been pre-approved with, and see if they offer this type of mortgage. If you have any questions, please let me know in the comments. Let me know, do you think this is like a legitimate miracle mortgage for some people?